Yeah.
So, how do I report Airbnb or short-term rental income on my taxes?
Yeah. There's actually a little bit of a gray area on this. So there's two possible answers. One is Schedule C and one is Schedule E. It depends on whether it actually ends up being subject to self-employment tax or not. Now, in most cases, it actually doesn't matter because one of the things about Airbnb is that the activity, if the rental activity has an average stay of less than 7 days, then it's considered active as opposed to passive. And there's all different kinds of implications for that tax wise. In fact, I put out a course last week or the week before called the Non-Passive Real Estate Investor, which is a free course that you can find in the Explorers group if you're not already in there. And it goes into this issue. But where do you report it is, like I said, you have the two choices. In most cases, it doesn't really have an impact because most rental real estate operates at a loss for tax purposes because of depreciation. So even if you're making money on a cash basis, you're probably losing money on a tax basis because of you're writing off a portion of the property over time. Now, as a short-term rental that's active and instead of passive, go to the course and you can find the details about all this. But that allows you to be more aggressive about depreciation. And you can take more expenses in the early years as opposed to waiting 27 and a half years to capture all that. And that gets into cost segregation and things like that. So most people will just do it on Schedule E. Some people will do it on Schedule C. The only twist with the Schedule C is that if you have a loss there, that can impact your Social Security earnings later on in life. Just be aware of that issue. I've had a couple people be surprised by that when they look at the earnings record with the Social Security Administration. By the way, everybody should have an account at SSA just to have it so that you can look up your earnings history online and not wait for the letter that they send you once every 5 years or whatever it is. And you can queue into issues like that. So I remember I was talking to one client, and this was unrelated to real estate, but at the same Schedule C issue. He was looking at his earnings and it's 30,000, 50,000, 40,000, zero, 80,000. And he was like, I earned money this year. So why does it say zero? So we looked up his tax return and we hadn't done it. He had a copy. And I said, oh, yeah, your W 2 was $40,000 that year, but your Schedule C was minus 60. So that puts you at minus 20. Because the Schedule C has self employment impacts, that eliminated your Social Security contribution, even though you didn't get the money back. Because again, it's not a fund for you, it's fund going into paying other people. There's that nuance to be aware of. And typically we will run them on Schedule E along with other rental properties. If you're doing all the management yourself, there is an argument to be made to do it on Schedule C anyways, but case by case basis. So yeah, it
That was going to be
depends.
my next question, Neil,
Yeah.
was what's the best way to report rental income? Is it Schedule
Uh,
C or E? But you already answered that. So
yeah.
unless you want
Yeah.
to elaborate even more.
Yeah. So if it's a long-term rental, it's always Schedule E. If it's short-term or active, you can have that discussion as C versus E.
So it depends.
It depends. Yeah.
Alrighty, understood. Looks like we have another real estate question.